You're now tuned in to another episode of Juicy Gems, your go-to podcast for everything related to the world of stocks. Discover new trade ideas, current stock market trends, and option trading tips, exclusive interviews with other successful traders, and so much more. Let's go! Welcome to Juicy Gems. Now with your host, Xavier the Master Trader.
What's going on, and welcome back to another episode of Juicy Gems. I'm your host Xavier, also known as the Master Trader, and today we have another special episode. So what we did today, went out and I sat with a lot of my peers, known names across FinTwit, and what we did is we sat down and said, hey, towards the end of the year, let's go ahead and get some content out that can help the majority of people. And the commonality what people are struggling with is holding on to their winners and cutting off their losers quickly. So in about 2 seconds here, you're going to see the Twitter Spaces recording. We're going to attach it directly to this particular podcast, and this podcast will start in 3, 2, and 1.
This time, what I really wanted to do is really give you guys something that people struggle with, right? And for me, I sit with a lot of new traders. I work with a lot of new traders, and a commonality amongst a lot of traders and people that I have known, even experienced traders that have not pushed through. What I mean by push through is got to the point where you're consecutively profitable. So in order for you to have that push through, that breakthrough, you need to understand that you do need to have bigger gains than losses. I know that sounds simple, but as we start talking about trading, people's losses throughout their trading career hinders their P&L. You might have some short-term consistency just to give it all back within a week. Or you might be very profitable, and then all of a sudden, 3 months later, you give it back. Or you might be cutting losses very fast, but you're also cutting your gains really quick. These are stuff that majority of traders are struggling with. And it's like, if a lot of people just did the opposite of what they would do with the loser. Because a lot of times what ends up happening is they'll let that loser run. They're getting in trade, it's down, and like, you know what? I'm going to give that thing a couple extra seconds. I'm going to give it a couple extra room. And the next thing you know, it goes lower and lower and lower. And if you're trading options, theta and gamma kicks in, and that kicks your ass. And then when you're in the trade and you're up 20, 30%, you just get right out of that trade. You need that trade that's winning in order for you to feel your profitable P&L over the course of 60 trades or the course of 100 trades. You need to hit those bigger trades. So in order for you to do that, how do you do that? How do you understand what's going on? So I just want to go ahead and cover a couple topics. The first one is, what type of asset are you trading? Right? I'm going to be honest with you guys. Majority of people out here trading SPY, SPX. I highly frown upon it, and I know I sound like a hypocrite because I do trade SPX, but I feel like with SPX, a lot of the losses that we take on SPX are very unnecessary. Even with SPY 0 DTEs, a lot of it is unnecessary because we have Greeks. We're not looking at asset prices and what the asset's doing. We're not making decisions on what the asset is doing, and that's what we should be doing. We're making decisions off the Greeks and how they affect the price of these contracts. That's why when traders get inside trades, one green candle comes in, they like right about out of this trade, and they leave that right on the book. So what type of asset are you trading? And for me, I've made some changes recently, and I saw my P&L just explode. I don't trade. I do a little bit. I don't trade as. And ever since I've started trading ES directly, I feel so confident in my trades because once I get up 10 handles, my stop loss goes to break even. And there's a line on my chart that the computer is automatically going to take my stop out. So if I get one green candle that comes against me, I'm looking at my plan and I'm looking at my stop. Okay? So the next thing is, can you properly identify a winner? So for me, if I get in the trade and I get in on trigger, and I get a swing high and I get a swing low above my stop, preferably above the trigger where I got back in, and that thing comes back around and breaks that high, I got a winner. I got a runner. That's the trade you want to hold. And all you want to do is trail that stop up because at the end of the day, we have our targets. We don't know what the market's going to go. That's the only thing you can do is trail that stop up and let it go. Just let it go. And lock in profits on the way there. Now, when you're in a trade and it's going against you, obviously, you need to stop out. Like I've sat with over this last 2 weeks. I didn't really sit with a lot of people this week. The week prior, Every trader I sat with, they're like, yeah, I cut my losses. Pull up their trade. They show me their trades. And guess what they're not doing? They're cutting losses, but they're not cutting losses at where they say they're supposed to be cutting them. But guess what? You have options contracts, and that extra gamma kicks in. You're trying to target a 10 or 12% loss, but you took a 30% loss because you're trading SPX and it went just under your stop and you didn't get out. Well, you did that 3 times this week, and your only gains were 50% off 2 different trades. So net, you're not going to be profitable. You understand that? So from me to you, find the asset class that's going to work out. And once you get that swing high and swing low, work on the risk management of it and letting it go and start working on runners. But I'm the host. I don't want to hog up all the topics. I want to give speakers chances to say stuff. I don't want to reiterate things. So I'm going to just throw it around. I'm going to throw it to Pro Trader Mike. And then we're going to throw it to Desi and then Paper.
Nice. Great conversation, Juicy. Really, it's great when you find something like you did with the ES. I found it. I could trade the ES, but I like the micro NASDAQ and the NASDAQ a little bit more because it just swings a lot more on the futures for me. But, like on today as an example, guys, normally if you're getting like, maybe $100 per trade last week, that wasn't happening today, man. If you're looking for the same setup, the same execution, the same result, it ain't gonna happen. Today I was clipping 20s and 30s like they were going out of style because up and down, pretty predictable. So just adapt to what the market's giving you. Don't push the market. Don't try to be bullish or bearish. Just try to be right on your trade. And like when he said I'm trailing that thing and I got 10 handles of profit and you can move that and follow the profit and keep on going. No one's taking away your profit. That's why I'm not a professional poker player anymore, guys. I was playing poker this weekend, dude. I had the best hand. The guy freaking pulled the river on me and beat me. When you're up in trading, like Juicy is, there's no river card coming that's going to take his profit away and make him go loss. You're profitable, you're trailing it, and that's just the beauty of trading. So that's why we're all here. Follow the wisdom, guys. We're taking our time out. I'm a 30-year trader. I could help a lot of people. Juicy's a 10-year pioneer, OG trader. He's here to help everyone. Send us direct messages. We're here to help you become better traders. Yes, sir. Everyone have a good Thanksgiving. Peace.
Love the personality. That's Pro Trader Mike, guys. Knots, what's going on? Come on up, brother. We're going to keep it moving. We're going to throw it to Paper, then we're going to throw it to Desi, then we're going to throw it to Knots. What's going on, Paper, man?
Yeah, man, totally appreciate this. Dude, I am totally digging your topics lately, but this is another huge one for me. I'm in a lot of servers, I guess, as a trader, and what I could say is like my P&Ls personally are percentage-wise, they're pretty high, right? And I think that's kind of like that's my thing. But what I would say to that is it's really important to understand what your thing is, right? So like if you're a scalp trader, futures are going to be better. Just your liquidity, you don't have your big bid-ask spread. If you're a day trader or swing traders, options might be better. But understanding the derivative and matching the right derivative to your specific trade style, that's huge. I mean, like that's going to make all the difference in the world. You'd mentioned trade management and risk management. I think that goes to position sizing, right? And I guess more towards the topic, specifically how to hold your winners longer and cut losers right away. It's like, if you're oversized, you're going to be scared when you're trading. And if you're scared, you're going to cut your winners too early, and you're going to cut you're going to let your, loser probably drag on a little bit more than you wanted to, because you're probably going to be thinking, oh my God, I can't lose this much money. So position sizing, number one, to me is like, that's the first and foremost thing. And then you get into trade management, right? Like as an options trader, understanding that derivative, understanding volatility, that's crucial. If you don't get what delta decay is, if you don't know what charm is, if you don't know how volatility is going to affect an option, you're going to be you're going to be stuck trading price action. And quite frankly, that's only half the battle when it comes to options. And I think that goes back to my first point. But really, it's like I will reverse on a trade, or I will cut a trade if I have a trigger short. So when we set up trades and we put together our personal trade plans, all of us, as in like any professional trader, we know we have our targets, we have our triggers to go long, but we also create a trigger to go short. And so what we're doing at that point is like, if I have a trigger to go short and I'm in a trade that's long, that's when I cut, right? If I have a trigger to go long back to back to back to back, there's no reason for me to close that trade, right? So like if I have a target, but maybe it's blowing through it, I'm zooming in on a sub 1 minute chart, not a joke, right? And I'm watching like tick to tick to see when is that strength going to actually, stall out. The second it stalls, and I don't mean reverse, after a profit target's hit, that's when I'll take it, right? It might go further, but that's going to be the difference, probably 25, 35% difference of, I hit my target, or I let it run a little bit farther, and I zoned in on it, and I laser focused, and then took it the second it started to stall out. If it's...
Hey, Paper, can you touch, everyone talks about, on the winning side, could you touch on the losing side? Because we're more experienced traders. Like if it's stalling around and you're down and it's not going to go back to where you are, can you explain how you trade out of a loss? Like sometimes I'm down like, a couple of hundred, I just know I'm not going to get back to even, so I start to cut the position. So if it goes more of a loss, I'm trading in the red. Do you do that? Can you explain how you handle that situation?
Yeah, a lot of times, so that comes all the way back to that first position sizing piece, right? So like if I'm drawing down and, you hear the term play to the charts, right? Like as an option trader, there are a lot of other option traders that are always saying, play to the charts, play to the charts. It's true. Play to the charts, that's true. But your contract selection matters almost more so than playing to the charts. And that goes back to understanding the derivative that you're trading. And to your point, Mike, it's like if I bought the open, but the trade's still valid, and I see a new setup to go long or another setup. So if I'm in a trade and I have a direction, it's a directional trade, but my contract is drawing down, and I can identify, hey, did I buy high IV, right? Did I buy a breakout? That's sign number one. If you bought the breakout, you're going to be in trouble. But if I bought the breakout, I can hold a little bit until I get a trigger short, then I have to cut. But if I get a re-trigger to go long, right, like a new high or a new higher low after breaking structure one more time or continuing structure to the upside, and I have an opportunity to add in a trade that's already red, but is directional on a re-trigger long or re-trigger short, whatever direction is, I'm going to add there. But if I oversized out of the gate, I don't have the capital to add there and still be within my risk parameters. So I think for me, I'll enter into trades, but knowing that like my trade plan specifically, I'll give myself room to double, sometimes triple into positions out of the gate, depending on A, the day of the week, right, and B, the time of the day, and knowing those, like that's what's going to matter, right? I think I'm trying to find a trade. Actually, I think Disney today, right? Like I entered short. Let me see where it was. I entered short, right, like 96.78, right, on the rejection of post-market or pre-market low, right? We got a little bit of a push down. I took a little profit, but it wasn't much. It was like you're saying, like one of those 10 percenters. But I'll hold for a drawdown right now, actually knowing that this is, I guess, one of the things, like if I'm in a trade, and maybe this goes to your question, like if I'm in a trade and I see, oh, dude, I missed my exit, you could trim there, but I want to see what's the next short trigger if let's say I'm short on Disney, and right where it closed is right about that, golden zone kind of retracement for today's move. So I'm okay to kind of swing short today, knowing that, well, if it goes up, I'm just going to cut right away. But this is really more like a value area to swing short. I don't know if that answered your question, but I got to go back to
Yeah, it kind of does. I simplify it for the audience. I call it my life preserver trade play. Let's say you're jumping the water and it doesn't go your way and you're going further and further away from the boat. There comes a point where you don't see the boat no more and you know you're in a freaking loss. Then you start to come back and you see the boat, but you know you're not going to get onto the boat. They're going to throw you the life preserver. It's okay to judge the amount of loss at that point you want to take because it retraced back. If I sell it and then it goes to where I want it and higher, big freaking deal. At least I covered my rules of my loss and my life preserver, because I have found that it really never goes back to where you exactly bought it. It'll come short a little bit and then it'll dump again. So when you see the life preserver, guys, take it, man.
Yeah, I got a loss for you that will probably match this then. So NVIDIA today, I saw fair value gap at like midday high around 159, just barely sub 160. And I took NVIDIA short. And I took it short. I took a 155 put at $100, and it pulled back. It actually gave me like a $1.25 profit, or like $25 profit. But I'm like, to me, it doesn't fit my model. So my average win is 100% plus. My average loss is about 30%, and I have about an 85% win rate, over any considerable period of time. So I know my metrics. But the second that it broke that, what's your trigger long, 159.18 today, I know, you know what? I need to get out of this trade. I was down. My actual entry was like 105 on those 155s, and I ended up closing at like 79. So that's probably my max loss, but that's kind of like stick to the plan, right? Like it's a loss for sure, but it's not a loss that's going to crush you. So I think that goes back to, number one, position sizing. I'm not going to double down on that guy, right? But because why? Because it's a trigger long, right? So I have to know if I'm in a short, I always have to know what's a trigger long going to look like and where is it going to happen. If I'm in a long, what's a trigger short going to look like and where is it going to happen along the entire way. So like as I'm hitting targets on my trade, I have to know what the inverse camp is going to be looking for to take their trades, if that makes sense. So like, let's say I was long on NVIDIA on the break of yesterday's high. That's a good trade. And at 159, if you're not going higher, you'd probably want to close that call, just because you should know that, hey, the bears are going to be looking at this fair value gap. You want to get out of the way if they start to win, or inverse, right? Like if I took that fair value gap, right, the second it goes above that high, I know that it's going back up. There's no question in my mind. It breaks this, it's going here. It's just very simple. Really, those are like strat levels, right? Like it's the same kind of candlestick setups. What does a call trigger look like if I'm in a put? And what does a put trigger look like if I'm in a call? I have to know those throughout my entire trade all the time.
100%, man. And that's paper gains, man. Appreciate you, man. Like I said, like I've been trying to tell people, this guy's he's a genius. He's underfollowed. Y'all need to follow him and everybody on this panel. So appreciate you for coming. We're going to throw it to Desi, then we're going to throw it to Knox. What's going on, brother?
Hey, how are you doing? So, something I just wanted to touch upon was actually what Paper talked about, and I was actually planning on make a video on this whole situation, or this topic, I should say, just because I think that the number one thing when it comes to holding contracts and cutting losers on time is all about position sizing to me. So a lot of people, without even realizing, they're really before even entering trade, they go in with $1,000 on like let's say a $2,000-$3,000 account. You're automatically oversized on your port, right? You're automatically risking way too much percent of your whole entire port in the trade. So you're risking a lot. So like Paper literally touched upon this. When you're up 10% and the play is perfect. It could be a bull flag, whatever it is, breaking out, you have your target set, whatever, and you're taking the 7 to 8% gain, and you're cutting early because you see these kind of numbers. You're like, oh my god, 10% on on $1,000 size, that's a lot for me. So I'm going to cut the trade quickly before even letting anything even play out. However, on the flip side, you're down 10 to 15%, and your structure broke. You're not looking good. These calls aren't going to work, but you're not cutting because you don't want to see that unrealized loss become realized because it's such a big portion of your portfolio. I'm sure everyone has taken a small lotto position, right? Compare how you feel to that size compared to your regular size. If you have no emotional attachment to the money on that lotto size and you feel confident, maybe that should be your real size during a trade, and your regular size that you call the regular size, the actual the one that's actually oversized, shouldn't even be in question yet, just because you're feeling anxiety, or you're worried about the trade. You're looking at literally every single ticket like, oh my god, it's not going my way, one wick and you're getting stopped out, or you're taking profits or whatever it may be. And that all comes down to how much you're risking and how much you're actually, putting into the trade. So obviously sometimes your stop loss, you could catch a knife and, you're going to be down 20, 30%, whatever it is, whatever maybe the case. But I see a lot of people, they're like, I'm going to take this trade, and I know they're oversized. I'm looking at them. I know, I'm like, okay, I'll tell them you're oversized. And then now, the end of the day, they're showing me a put position that's down 80% because they didn't want that realized loss at 20%, and now at the end of the day they're like, oh my god, my port's gone. Today was actually a perfect example because obviously we had a clear trend upside today, right? I know a lot of people have some resistance levels. They took shorts and they just refused to cut it because they were oversized. And the beauty of trading is, like, especially on cash accounts or whatever it may be, you don't have 25,000 in your portfolio, you could flip sides. Like, if a resistance breaks and you see this retest and it still continues to upside, you could, instead of going shorts again or trying shorts again, you could go to the flip side and go on calls. And the main thing I just want to emphasize, Paper already said this, so I don't want to keep saying the same thing over and over again. Make sure you guys are sized properly in these type of trades, especially on 0-day contracts. They can move really crazy, as we all know, SPX and SPY. So just work on your guys' size, and you size down a lot to the point where you're in a trade and you don't feel anything like, oh my god, I'm going to lose this money, or oh my god, like, this can't go red, I have to make this go green. Make sure you guys are
It's
trading
at
for
a
that.
discount for a reason, because it's a piece of shit not to add on to it. So remember that.
Exactly. The contract is down because it is not working. If it was working, the contract would be up. And that, to me, is the best way to actually catch those, those 50%, you catch a good 50% move, but I took profits at 5%. Just let the trade play out, and you'll see over time your consistency will also build up, because now you're actually cutting your loss, because that realized loss isn't going to hurt as much, and you're letting your winners run because, obviously you're sized down, and just get more of the trade, and just work on that, and it slowly build up size. You guys got to understand, all this is tied into the trading psychology. This is going to take a long time. As like Juicy, a pro, they've been trading for so much longer. I still consider myself new to this trading space. I've only been doing it for a year and a half, 2 years. So it's like, just take your time. Don't rush the size. You're only trading against yourself. It's you versus you. Don't worry about if someone's making $100,000 in a day, because I don't want to say 90% of the time it's probably fake anyways. So just worry about yourself, size down, and let the trades come to you. And that's pretty much what I had.
Appreciate you. And he says, I've been in this game for a long time, but I just want to say something. They say, history repeats itself. I mean, honestly, for the first time in a long time, majority of traders in 2022, this is a brand new market. This is the first time we had inflation,
100%.
Federal Reserve,
100%.
quantitative tightening. We're doing the opposite of what we've been doing over the last 10 years. So in theory, everybody's new. Just honestly, everybody's new. This is a new game now. New playing field. This field is even. You know what I mean? So it's very important that you guys pay attention to these concepts. So great stuff by Desi. And now I'm going to keep it moving. I'm going to throw it to a good friend of mine, the best thread writer on Twitter. Throw it to Knots, man. What's going on, brother? What's your comments?
Okay. Can you hear me?
Loud and clear, man.
Sounds good. I'll keep it short and simple. I'm at the gym right now, so sorry about that.
Yeah, get that pump.
True. But yeah, I mean, just basically going over what happened.
Oh, my God.
basically
Yeah, that was the
going over what
soundboard. You have a soundboard, Juicy.
No, that was not when he gets up on the bench press.
Let's go. Do you have a
last week.
soundboard on your?
Nah.
Let's go, Nazi. We have Jay's hands up if he wants to ask a question while Knots is coming up.
Can you guys hear me?
No, we're gonna give it to Knots. Knots, go ahead and go, brother.
Wait, can you guys hear me?
Yeah, loud and clear. You good?
Okay. Yeah. So basically, last week I didn't do well. It all comes down to what I'm doing wrong position sizing, what I'm doing wrong.
I don't hear him. Do you?
Exit.
Wait, hold on.
No, he just can't hear me.
Yeah, Pro Trader. He's speaking. Sometimes they do these weird glitch things with spaces, so I'll let you know when he's done.
Yeah, you can hear him. You might want to drop down and come back up.
But go ahead, go. As soon as you're done, I'll let everybody know. My bad. Last time we interrupted. You good? Not?
No. That's good. Yeah. So last week it all depended on position sizing, entry, exit. Missing opportunities and just really psychology. So kind of going into it, holding these winners and cutting these losers is going to be the key. And obviously, as simple as it is to be said, it's hard to do. For today, a good example is I had an HD swing, and that continued, up strong today. I had NVIDIA at the bottom basically, and that was doing really well. And what I basically did what I do with my winners is, I trim. Let's just say I have 3 contracts. I'll make it simple. I'll trim 1 or 2 depending on how much I'm up, and then I'll set the remaining contracts stop and profit. And as the contract continues to go up and the price continues to go up, I'll obviously raise that stop to lock in more profit and also let them run as much as I possibly can. So that's how I work the letting the winners run section of this. Now the losers, for me, it all depends on the charge. And again, the winners the same thing. It all depends on the charge for me. So the losing side of this, it depends on the chart. I'm okay with losing 30 to 35% because I'm not going in heavy. I'm not losing 5,000 on a trade. I'm not losing 10,000 on a trade. I'm going small, and it also comes into play that I'm also playing with a small account too right now. But even when I was playing with 100,000, 150, max I would lose in a play is 1,500, 2,000. I was okay with that. I knew my rules, I knew my stops, and that depends on the chart as well. So if my levels are broken, let's say I'm at 25% loss currently on a contract. My chart is still in play, and I could possibly bounce back and stuff. I will look to, keep that position on. Of course, if it continues to theta burn and I don't see anything going there, I'm gonna basically put a hard stop at 35, 40%, and that's just in the case that it just chops. I don't want to kill it, more, worse than it has to be. And again, it really depends on the situation. It's so much easier for me to talk about it if we're in the actual trade, let's say right now. And I see what the market's doing on the day. I see the trend. I see, how it's moving currently. So it's much easier to talk about it then than just, speak about it now and just giving like an example like that. But, I keep all this into effect in the back of my mind there. And for example, I guess a good example today is initially on Amazon, I had a swing overnight on that too. That was my only loser today. And actually, if I held it, I would have been up 50 to 60% today. So, it came back to kill me. Oh, no, not kill me. It came back to hurt me. I had a very good day. But, if I was able to hold that contract, if I thought it had more strength this morning, I would have held it. It was looking really weak at the open. I was in calls. I swung it overnight. I lost, I think, 29%, 30%, just about. But at the open, it was getting killed. It gave up all its gap up gains, and it had 3, 4, or 5, strong red bars. So I took that loss right there because, one, the chart didn't look good. Other names were looking, decent, but Amazon wasn't. And over the past couple of days, it's been getting killed. But I did like the 92 area, and it broke below that. That was another key thing. It went to low 91. So, it really depends on the chart and being able to cut those losses. And one thing I've never done is, hold something to 75, 100% loss or anything like that. And I see a lot of people do that. I see a lot of people keep averaging down, thinking they're going to come out of it. And that's only going to get you in a worse position. I've seen it happen before. Sadly, and I can say this about two people, I've seen them sadly blow up their accounts doing this. And I'm not talking about like $10,000 or $20,000. I'm talking about like 50 to 100 plus. As sad as that is, it happens. So building that strong mindset, building that plan on how to cut and how to take profits and let things run, it's just one part of how to be successful. And there's so many more things you could do to be successful. And one is just putting in the hard work. Two, learning charts, learning volume, learning flow. Three, finding that what is the best execution for you and how to execute each trade, the way you want to do it. And four, which is the hardest one, it really is, that whole entire mindset, that whole entire psychology on being able to, account for the real money that you're trading. Because you can paper trade, $5,000. If you use 5,000 in real money, you might have a total different, psychology and mindset. When you see you're down 200, you see you're down 300, and then only, to cut that position, but it wasn't a position that you needed to cut at that time due to the chart or due to other things, to only see it go up, 2,000. And that, that kills your mindset too. It makes you, get a little freaked out there. So that's kind of where I'm at.
Appreciate you. That's G Knots. We're gonna throw it back to Pro Trader Mike. I know Eric's up here. I think Pro Trader Mike had a comment. If not, we're gonna throw it to Eric. But the floor is yours, brother. He might have stepped away. But Eric, man, what's going on, brother? It's back to you.
What's up, man? How are you? Thanks for putting the space on, and thanks for having me. I think these conversations are some of the most interesting ones to me because I really do believe, understanding how to size and manage both winning and losing trades is ultimately what differentiates traders from one another. And there's a lot of observable data that we can look at as, anybody that's heard me talk before. I'm always interested in the data because it's less subjective and more objective than what we think or how we feel things may or may not go. And one of the observable data points we know from one of my favorite studies is called the behavior of individual investors, is that retail investors tend to hold losing trades, meaning allowing them to compound and cut winning trades too short. So for those that can kind of read between the lines there, that essentially means that it's deploying a negatively expectant strategy where if we let even a small number of losers get big enough, they can overwhelm all of our winning trades. And retail traders have a propensity to do that. And it's for a couple of reasons. One is confirmation bias. If we take a winning trade off, we feel like we were right. And our ego likes that. So our comfort-seeking side of our brain that wants to be placated wants that comfortable outcome. So you have a small win, and your mind literally starts trying to manipulate you into experiencing that positive event. And it does the exact opposite when we start having a losing trade. We don't want to realize the loss because then we were wrong. Ego doesn't like that. It wants to avoid that kind of sensation. So we start turning to things like the broken four-letter word of all retail traders, which is hope. Hope is an awful strategy. Hope has no expectancy whatsoever. And if you have the words hope in your plan as it pertains to managing winning and losing trades, it's just problematic because you can't really regulate or optimize hope. So I feel like that's just one really important data point for retail traders to be aware of, is that at large, we have a propensity to let losers compound way too large and cut winners too short. And it's supported in a lot of different ways. You'll hear people say, oh, you'll never go broke taking profits. And my response to that is always, well, if the sample size is large enough and the profits are small enough, you certainly can go broke because all we're doing is deferring risk. really we have to make sure that we're managing the downside, because that's where money is lost, not, just taking small profits. But again, that substantiates that study I referenced earlier. So the last thing I'll note just real quickly is, how do we size trades? What's the right methodology? If it's based on a haphazard approach where sometimes we feel like there's more opportunity in this one thing and less in this other thing, and we have a very random sizing approach, again, it's very difficult to create an observable data set from that you can optimize and figure out what's working and what's not. I'm a huge proponent of logging down your trades by strategy. Different strategies, in my experience, require different thresholds, and that's actually worked really well for me. And what I like to do is see what thresholds give me the optimal outcome based on different market conditions. To give you like a current example right now, we're in a very interesting market, and volatility, I'm a derivatives trader, so volatility is my lifeblood, and it's been moving strangely. Not to say it's never moved like this before, but it has been moving strangely. So typically in these kind of environments, I like to trade volatility-centric strategies like short straddles or short strangles, which is just two different kinds of option strategies. We can go into that some other time if anybody's interested. But the punchline is, for something, if I'm trading a short straddle, I'm going to have a different win rate and I'm going to have a different win size. So what I mean by that is I'm going to have more losing trades when I trade a short straddle, but my winner is larger. And if I trade short strangles, it's the inverse. I have a much higher win rate, but a smaller average win. So taking the time to understand how these strategies play out and the math behind it, it gives you an objective tool to decide what makes the most sense for the account, as compared to, I feel like this is that, or whatever other feeling all of us traders have, to try to create a little more of an objective landscape to make decisions off of. But just a couple thoughts there. Juicy, I'll give it back to you.
Appreciate you, and that's Eric. I'm telling you, the people I be bringing up here, man, are so underfollowed, man. Be sure to follow all my speakers, but that's going to conclude this episode of Juicy Gems, man. Guys, I would love some feedback. Tag me in some posts, man. Tag me in some comments so I can make content and grab speakers around you. I'm going to get the best of the best, and I'm going to give you my trading experience to help you overcome these issues, right? So the more you guys can tag me, get this Juicy Gems names out there. Popularity is everything. That way Twitter Spaces can prioritize me. That way I can give you more speakers, more content, and I can help you generate a better positive P&L. But besides that, man, I'm leaving. And as always, be patient and wait for the market to come to you, as the market will always pay the patient trader. I'll be out, and I'll see you guys on the flip side. I believe we're live tomorrow at 9 a.m. So I'll see you guys in a.m. Be easy, everybody.
Take care, everyone.
Have a good one.
Thanks for tuning into this episode of Juicy Gems. Make sure to subscribe so you don't miss out on any future episodes. Also, visit juicytrades.org and join the trading community for live training videos, trade alters, or start training with the Learn, Grow, Profit Trader training program. That's juicytrades.org.